Hi, Mitch.
Yeah, Joe, you all right?
No.
Hello, you all right?
Yeah.
Oh, Darren, clean shaven, love it. Let's just wait a couple of minutes until we get. I think people are joining. So
Can you hear me okay, yeah?
hear you loud and clear. Darren, let's test yours.
Can you hear me?
Yeah, loud and clear. Cool. Let's give it a few minutes. How's things, guys?
Yeah, good.
Yeah.
Yeah. Getting back into the swing of lockdown, so to speak. Lots and lots of video calls.
It's been it's not. I mean, we'll talk about it in a minute, but it's not the same kind of lockdown as before, is it? Really,
No.
slightly different. But yeah, okay. Look, let's get going. So I don't want this webinar to last longer than an hour. I think an hour will be. It will only last an hour, if that. I think let's get going. So, firstly, hi everyone. Thank you for joining our webinar today. For those that that have been on our webinars before, we were running them weekly during the first lockdown, which in fairness helped so many people during the last lockdown and so on, and the feedback has been absolutely amazing from business owners and from partners that we're working with, of how many business owners that they've helped. And we've worked with a lot of people following on from those webinars. So we thought, we're in another lockdown, although, as we were just saying, it's not quite the same. But obviously there's been new updates, and there's been a lot of people that have asked us to start the webinars again, which is obviously what we do. And I thought that it was really important that we did one with all the new updates, and also some things that Joe, you're going to run through in a bit about how to recession-proof your business and things that you should be doing in order to get through where we're, I guess, currently at with the current climate. So for those of you who don't know, my name's Mitch. I'm the CEO of Nordens. We're a firm of chartered accountants. Our mission is for everyone we work with to identify and achieve their goals and dreams. For those of you that work with us already, I hope you can see that we have done and are doing everything we can to help you and all business owners, and we'll continue to do so and reach out to as many as we possibly can. As you can see on the call, I'm going to be joined by the very in-demand, I hope you don't mind me saying, Joe Sword. Joe's is the director of our strategic consultancy division, and also founder of our very special interactive accelerator program, which I'm sure we'll touch on today at some point. And Darren, hi Darren. Darren, you've been on before, but Darren leads our corporate finance division, and who has raised, I believe, around a good £5 million during the last 6 months to help businesses, whether it be to survive and get through this period that we're in, or whether it be to grow. So I am lucky and grateful to have them both on this webinar. Thank you. So how's this webinar going to go? And like I said before, it should last no longer than an hour, and I think will prove very beneficial to everyone who's joined. So Joe will be giving us all the latest updates from HMRC, which will include everything from furlough to self-employed grants, VAT, tax, and I think we'll touch on well-being as well, which leads into making key decisions. So Joe will touch on that. Then we will hear from Darren. Darren's going to discuss all the updates and things you need to know about anything finance related, what options you have, whether it be the bounce back loans, the CBILS, and any options that you should have, should you, and also touch on things that if you can't get the CBILS or you can't get the bounce back loan, what options you may have. From there, we'll go back to Joe, who will go through everything a business owner should be doing right now to protect and recession-proof your business. Afterwards, we should and probably will have time for a Q&A. So if you leave your questions in the question box, if you have any, we'll come to the questions at the end if we haven't touched on them during this webinar. The other alternative is you can email me at any time, mitch@nordens.co.uk, and I will throw any questions or answer any questions you may have. So let's get going. So Joe, you've put together key areas businesses and their owners should be aware of in light of the recent government announcements and HMRC announcements. Let's start. Do you want to just share them with us?
Yeah, sure. So, hi everyone. Firstly, before I get into it, I'd just like to say a big thank you to everyone from our Nordens family who's helped me with collating this information that we're going to share today. We're all at Nordens, as Mitch has mentioned, we're all working tirelessly to make sure that everyone that we work with stays up to date following all these announcements, and it's really appreciated. I've had a lot of help in the background, so thank you. So let's start with, well, what's effectively turned into the word of 2020, furlough. So the coronavirus job retention scheme, as it's technically known, was extended until the 2nd of December, but will now actually run until the end of March 2021 for everywhere in the UK. The UK government will, though, be reviewing this in January to decide whether circumstances have improved enough, and fingers crossed they will have with the announcement of the vaccine, the positive news on that yesterday. So fingers crossed, but the government will review it in January to see whether anything will change on that. So based on the announcement at the moment, furlough is live up until March, but there is a review in January, so the dynamics of it may change. Our initial feeling in our payroll department is that some form of dilution will kick in from January, but again, that's subject to change. It's what we're estimating may happen, but we're not totally sure. So right now, furlough's back on, and it's back on from March. So back on until March. The current levels of furlough will mirror the levels that were available under the scheme in August. So the government will pay 80% of wages up to a cap of £2,500, and employers will pay the employer national insurance contributions and the pension contributions in line with the furlough being claimed. Now, which employees can be furloughed? All employees can be furloughed, whether they're full-time, part-time, agency, flexible, 0 hours contracts, but they must have been on the payroll on the 30th of October 2020. And the way this will be verified is if a submission, like normal payroll submission, has been made to HMRC verifying the person was on the payroll at that period in time. People can take on other jobs while they're placed on furlough, providing it doesn't breach the rules of their existing contract. And employees who were employed on the payroll on the 23rd of September, who were subsequently made redundant or stopped working afterwards, can be re-employed and the furlough can kick back in. As employers, you are still able to choose to top up employee wages above the 80% at your own expense if you wish to. And finally, one last point, the job retention bonus, which was going to be the £1,000 one-off taxable payment to the employer for each employee who was furloughed and you kept them on, is not going to be paid in February now, obviously, because furlough has been extended. There's not been any firmer announcements on that, but I expect something may come out later. But right now, all we know is that's been suspended. So that covers the updates and the changes to the furlough scheme. Onto the self-employed now. So HMRC have announced another 2 grants for self-employed people, and each of them are available for 3-month periods. The first one will cover November 2020 to January 2021, and the second one will cover February 2021 on to April 2021. Who can claim? Right, so to be eligible for the self-employed grant, you must have previously been eligible for the previous grant, but you do not have to have claimed it. You just needed to have been eligible, so met the original eligibility criteria. You also need to be able to declare that you're intending to continue to trade and are either actively trading but are impacted by coronavirus, or were previously trading and are now unable to because of coronavirus. So what does the grant extension cover? So like I said, it will be paid in 2 lump sum instalments covering those 3-month periods. The government will provide the grant at 80% of 3 months of your average trading profits, just like before, and it will be paid out in a single instalment there will be a cap on it that will be 7,500 maximum. And that is an increase of what the government previously announced, because initially they said it was going to be 55%. They've upped that to 80% to sort of align it with furlough. As before, the grants are taxable income and will be subject to tax and national insurance contributions. So they'll need to go onto your tax return, because it's effectively supplementing the income you ideally would have received if you weren't impacted by coronavirus. The last thing for this, how to claim. So we anticipate it's going to be very similar to before, and HMRC have said that from the 30th of November to the end of this month, the online portal will be available. And further details will be published. So keep checking in with either us or the website, and we will let you know if there's any developments on that. But from the government's point of view, from the 30th of November, people can start logging on and starting to make their claims for the self-employed grants. Moving on to VAT now. So one bit around PPE. So there was a temporary zero rate that was introduced for providing PPE. That took effect from May 2020 up until the 31st of October. HMRC, as far as we're aware, have not issued another update around this. So from our point of view at the moment, the supply of PPE is back on the standard rate for anyone supplying that. So if you are supplying PPE and you just want to double check that you're doing things right from a VAT perspective, feel free to get in touch. The other announcement around VAT was that originally, when the first lockdown came into force, HMRC deferred or allowed you to defer one of your VAT payments to 2021. What HMRC have now said is you can stretch the deferment even longer, so you can actually make payments up to the end of March 2022. Now, originally, with the first deferral, it was just deferred automatically. You didn't have to do anything. If you'd like to take advantage of this longer time period and stretch the payment out to March 2022, you need to opt in. So what that will mean is that the VAT liability that you deferred, that was for the period between 20th of March and 30th of June, it doesn't actually need to be paid in full until the end of March 2022. HMRC is still advising that those of people who can make this deferred payment as early as possible, of course, will do so. But for those of you that would really benefit from that, and we'll touch on cash flow forecasts and why you need to do that to check to see how it will benefit you, can now make the most of this extra extension. But you do have to opt in. So make sure that you're speaking to people at Nordens or with your advisors to make sure that you do that correctly. So touching on tax now in general, HMRC has still been reasonably lenient with taxpayers. You are able to set up time to pay arrangements with HMRC, so our advice remains as it was before. Be upfront wherever you can, plot things as early as possible so you know where you are and you can kind of put together a plan of how you're going to make the repayments. People who have self-assessment tax due on January, so the end of January when everyone has to pay their self-assessment tax bill, you'll now be able to pay that over a 12-month period. So there's an extension for that, providing that your tax liability is £30,000 or less, you don't have any other payment plans or debts with HMRC currently, and you have no outstanding personal tax returns. There's actually no need to contact HMRC via the phone. You can actually set this payment plan up online. But HMRC insists you have to do it within 60 days of the deadline. So when working on your cash flow forecast, if it's something you feel that will benefit you in the short term, set a reminder to get this set up as soon as possible. It's worth mentioning that interest is payable on all time to pay instalments. There will be a bit of interest, but if you officially agree it with HMRC in this way, you will avoid those late payment penalties. So there won't be any penalties, but there will be a bit of interest. One other thing to be aware of, there's quite a few fake and spam emails floating around at the moment. HMRC have mentioned that they're planning to send reminders out by SMS or email to all customers, including those that are represented by an agent such as ourselves. The reminders are planned to be sent out on the 17th and 18th of November, so be on the lookout for those. But like we always advise, if you receive anything and you're not totally sure whether it's genuine, speak to us and we'll be able to tell you before you reply or click on anything. And finally, a reminder that anyone who's disposing of UK residential property, it needs to be reported to HMRC within 30 days of completion, and the tax also has to be paid within that 30 days as well. It's quite a significant change on the old rules on capital gains tax. So anyone thinking about or has recently sold a residential property, if you're not sure on that rule and you want a bit further guidance, just again, let us know. To just touch on the grants now, this one's been a bit of a grey area because they were announced, government announced further grant funding to local councils as when they were rolling out the tiered lockdown system. But now we're back under a forced lockdown. I believe the grants are still in the possession of the councils and they will be distributed based on sort of the council's discretion, so to speak. So anyone who feels they may be eligible for grants, anyone in those industries that have been really heavily affected, the advice is contact your local council directly and they'll be able to see what they can do for you. Just one other thing I wanted to touch on right now is from a sort of HR and health and safety perspective. So Sharon, our head of HR, has given me a few things people just need to be considering at this time. So from a HR perspective, put in place an agreement to change in the terms of employment to allow for working from home, because this will allow you to manage your expectations with your team members further down the line. And also ensure that your company's risk assessment's up to date with the current legislation and it's provided to all employees. Again, if you need assistance with this, our HR team will be able to give you some guidance. So I am conscious of time, I've gone through that fairly quickly, but that covers pretty much all the key updates that we're aware of, Mitch, following the recent announcements. But like we say, keep on the lookout for us. Things have changed in the past and they probably will do again. But right now, that should give you a bit of guidance on where we are with everything.
Thanks, Joe. I think just touching on what you said about HR, I've noticed in the last, say, 3 to 4 months, there's been a lot of no win, no fee companies set up to claim against companies for lack of risk assessment, I guess, for within companies. So just be aware that HR is extremely important at the moment. If you do have employees, it's something to just to make sure that you do look at your risk assessment, make sure it is up to date, and make sure that everything is provided to all employees that should be. And I think it's definitely worth seeking advice on this. We do have an HR team here to provide that if should that be necessary, but it is something that could come back to bite in the future. Just wanted to add to that. Thanks, Joe, and we'll hear from you shortly. Darren, I've had so many texts telling me that you don't look old enough to raise 5 million, but I can assure you that Darren is older than he looks, and he has raised over 5 million plus for our businesses. But I know you're going to talk to us about the financing and funding, and we've had a couple of questions already, which we'll touch on after. We'll touch on at the end, but I know you've prepared something with the latest update, so I'll hand it over to you. And I think I've got some questions I want to add as well as we go. Yeah. So over to you, Darren. So actually, let me give an intro. Darren is head of our corporate finance department, involved with not just raising finance, mergers and acquisitions. And in fairness to Darren, when companies have had issues raising finance, he's come in and he's found solutions for them, which meet their requirements. So Darren, over to you.
Hi everyone. So so I've got some updates with regards to what's going out there with corporate finance and funding options. So the two things I'll start with are the coronavirus business interruption loan, or the CBILS, and the bounce back loan. So you might have already seen that they've extended the deadline as to when you can apply for these. From the end of November, they've extended it to the end of January now. So you have got a bit more time to apply for these things if you haven't already. But what I will say is that with the amount of requests that the lenders are getting, the lead time has gone from where it used to be, 24 to 48 hours. It's becoming weeks that they're quoting before they'll get back to you. So what I would suggest doing is if you are looking to apply, or you haven't yet and you're going to, make sure you do it quickly. Even though you have until January and you could save yourself potentially some interest on it, it's more important to actually secure the funds than worrying about that extra month worth of interest. So just make sure that you're applying in reasonable time, given the time delays. With the CBILS, we're typically seeing interest rates of between 2 and 11%. It's so low on that side because of the banks offering good interest rates. But when you look at the alternative lenders, they're doing things between roughly 6 and 9%. So alternative lenders are going to be more expensive, but they also appear to be, they're funding a lot more than what I believe the banks are funding. The banks seem to be a bit the appetite isn't quite there as far as in comparison to the alternative lenders. One thing you can do, which a lot of people aren't aware of, is you can actually have multiple CBILS. So if you do meet the criteria and your turnover allows you to do it, you can get multiple CBILS with different lenders. So that means, for an example, if you did have something like, if you had £2 million worth of turnover, 25%, which is the criteria of the lending, 25% of that would be £500,000, which means you could, in theory, go and get 2 separate CBILS for £250,000 each and have no PG or any security with it. So bear that in mind if that you have already got a CBILS, or you're looking to get a CBILS, but you're concerned about the personal guarantee or the security that might come with it. With the bounce back loan, that's the flat 2.5%, like it's always been. But what the government have come out and said now is that you can actually top up your bounce back loan if you never went for the full amount that you're entitled to. So that was the lower of 25% of your turnover, or 50,000. So if you did go for the bounce back loan and you only got, let's say, 30,000, you can now go back to the bank and request more up to the 50 if your turnover allows you to. But something to bear in mind is that you can only go to the bank that you got the bounce back loan with originally, and you are only allowed one top up, which I've read is a minimum of £1,000 as well. So again, bear that in mind. They haven't announced official guidelines on how to apply for this, although I did see that Lloyds have got an application on their website as a separate top up to the bounce back loan. So I'm expecting more of the banks to follow with that. So what happens, I guess, if you've run out of that money and you need to get more, there are other methods, other types of finance that's out there. It's not just the CBILS and the bounce back loan, although they seem to be the easiest and the cheapest at the moment. The market used to be, it's broken up into two sorts of areas. It's secured lending and unsecured lending in majority of cases, but unsecured lending's typically vanished because of the CBILS and bounce back loan now. So it's that either you fall into the criteria of CBILS and bounce back loan, or lenders are going to look for some form of security. So just bear that in mind as well. Also, it's not really just about loans at the moment. A lot of people, when we talk about finance, they seem to have this idea that it's just loans that's available. It's not the case. There are other methods that you can go down to sort of protect yourself financially and with funding. So one of the things that I've been helping a lot of people with is Invoice Finance. It can still fall under the CBILS scheme in some cases, but Invoice Finance looks more at the future rather than the right now. It means that, in the fast forward a few months when we're hopefully out of all this, people aren't going to want to part with their cash just in case, something like this happens again. They've seen the damage it can cause if they're low on funds and they don't get business through the door. So we're going to see a lot of people trying to hold on to their cash. And if they're doing that, that means that businesses aren't, they're not going to be paid for work that's going on. Invoice Finance can help you there because you can receive the majority of your money up front. And it allows you to have that working capital to go and then trade more. It's much more forward focused. If you get a loan now and you spend that money, once it's gone, it's gone. Invoice Finance can also take a few weeks to get set up in worst cases. So if you were to sort of look at that, it's something that you should look at now, especially before the government help stops and more people look to this, because with the more demand, we're going to see interest rates go up, even though it is quite a competitive market out there. We will see it go up. But yeah, I mean, that all of that seems quite negative. I mean, there is a lot of positive out there as well. At the moment, the market's very active for mergers, acquisitions, companies looking to buy, sell, people seeing it as a perfect time to exit, people seeing it as a perfect time to snap up these businesses. So, that's also options out there. We've definitely been able to help people secure funding to be able to do that.
Sorry, Darren, can you use the CBILS for acquisitions?
Well, the CBILS criteria is either for data, sort of working capital, let's say business survival or business expansion. They're pretty much the two the two options you get. So if you want to class it as business expansion, I guess it falls into that category. So yes, I would say you can.
Sorry, I've got another question. Sorry.
Yeah, go for it. That's fine.
So because obviously the bounce back loan, you can go on to your online banking and just, request it directly with your bank with a bounce back loan. But if you want to go and get the CBILS, what sort of criteria are the banks asking for?
So there's two different types. The banks, the high street banks, are asking for a lot more information than what the alternative lenders are asking for. So the banks are typically going to have you fill in an application. They're going to then send you their version of a fact finder, and it's going to be quite a large PDF or document where you're going to have to fill in a lot of financial information and background information about the business. Together with that, you're going to have 12 months worth of bank statements, although your bank should have that. They're going to want to see your last submitted year-end accounts, and they're going to want to see some management accounts or management information through the pandemic. They're also going to want to see a cash flow forecast for the next 12 months. There's a lot of hoops to jump through if you go down the high street bank route. With alternative lenders, they tend to just want to see the last filed accounts and 12 months worth of bank statements. If they can do something based on that, then they'll do it. If they need more information, they usually come back and say, we need, a slightly more recent management reports. But my advice would be to get your information up to date, because that is where I'm seeing the biggest delays, where people don't have their information up to date. Lenders have come back saying we need more up to date information, and it's going to take a lot of time for people to get their information up to date. And now they're they're stuck in a horrible position where they need the money, but they can't access it before they get everything up to date.
I think finance or not, people should have, all business owners should have their information up to date to see their current position anyway, which I'm sure Joe's going to touch on as we talk about recession proofing. But I guess to summarize, there's a lot more financial options that what people are even aware of. For example, even like, you mentioned briefly alternative lenders. If the bank aren't prepared to lend you that money, there are alternative lenders. They're probably slightly more expensive, but it's definitely a way to go and create the finance that you need, whether that be to survive this period or for expansion and for growth.
Yeah, absolutely. I mean, when let's call it lockdown one sort of happened, lenders were scared, they panicked, everyone was going to them for funds. They weren't sure what was going to happen. There was a lot of uncertainty. It's not the same this time round. They seem a lot more confident. Their appetite to lend a lot. It's increased a lot. The alternative lenders, that's their sole purpose, is out there to fund clients, to fund people. That's what they want. They want to do it. They don't not want to fund people. Otherwise, they don't make their money. So yeah, there's definitely options out there. Definitely options. And I guess it's just about finding as well what option out there is best suited for your need. Like I said, everyone thinks that a loan is the only thing out there. A loan might not be what you need, based on your finance, your pinch points, or your, what you're struggling with. It might be invoice finance. It could be asset finance. It could be a bridging loan. It could be a development loan. It could be a merchant cash advance. If you're in retail, there's so many different products out there. So it's just about identifying sort of where that weakness is and then match the product to it.
Yeah, good. And I think it's not necessary, and I know I asked you before if you'd bring up this example because I think it's absolutely brilliant, but it's not necessarily a bad thing to create debt in the company if you're looking to grow as well.
No, absolutely not. No. The analogy that she's talking about is I often use it is to do with house buying and mortgages. And a lot of the time when I'm dealing with clients, they'll mention, they don't want to get into debt or they don't want to take a loan. They consider it as that their business is poor or they're unsuccessful. But if you were to, for the homeowners, when you buy a home and you have a mortgage, you wouldn't dream of considering yourself as a failure for owning your own home. You'd consider it that, you're in a property ladder and you're successful, or you've got an asset now that's worth hundreds of thousands, but you don't talk about the 30, 35 years worth of debt that you've also signed up to. And it works the same way in business. Taking on that mortgage allowed you to go and get something worth a lot more in value that you can retain even once that mortgage is paid off. And it's the same in business. Don't be frightened of taking on finance to allow you to grow or to expand into to achieve your goals quicker. You know, that finance is short term, but what you can achieve from it will be long term. The only bad debt is unmanageable bad debt, but that's where we can help and help you plan and make sure that it's the right thing to be doing.
I love that analogy. Thank you. So what I will say is that anyone who wants to discuss finance for their business or any, or they don't know if they need or want or so on, contact us. Darren will be happy to help, right? Just drop me an email, mitch@nordens.co.uk. I'll do an introduction to Darren and I will, and then we can help you and, you know, potentially help you or just chat to make you feel comfortable about anything that may be bothering you. I think that's it for now. We do have some questions for you, which we'll come to at the end. So, but thanks, Darren. That was the analogy is brilliant. I love it. And I've just had a message now to say brilliant analogy. I love what Darren says. So absolutely brilliant. Thank you. Joe, I want to come back to you because the next step is we're talking about what business owners should be doing right now to protect their business. I think, you know, one of the most important things we're hearing, you know, day in, day out, that the economy is going to shrink and, you know, job employment's at its all-time low. So I think the most important thing right now is to protect. So look, we're in another lockdown, be it's not the same, I admit that, but what can business owners do to protect themselves?
Well, I think, I mean, firstly, I think everyone who's survived this, every business owner who's been through the first lockdown and survived it will have now built up a significant level of what I determine mental resilience. And this mindset or thought process or belief process will really need to be tapped into as we move on to our next challenge. Like we've said, this new lockdown is similar, but it's not going to be the same. There'll be different elements to it. There'll be different challenges. So having that strong mind and that positive mental attitude is going to remain as important as ever in this next stage, because it's going to have its own challenges, just like the first survival stage did. But with the right mindset, you can ensure that you're best placed to tackle anything. So I think that's the first sort of key thing. I think you need to get into that mind frame that got you through the last stage.
So, you know, mindset, I'm a massive advocate of getting into the right mindset, but people, and, you know, including myself and many other people that I've spoken to, they find it difficult getting into that right frame of mind. And I know you've been working with a lot of business owners to help them, and you've been working with business psychologists and so on. So what would you suggest for people to get into that mindset?
Well, I think it's something that develops with practice. I don't believe that perfection exists. Maybe I used to, but I don't believe perfection exists. Because even the most mentally strong people, you can probably think of the people that you work with who are the most mentally strong, are always working on it. So my advice would be to use something what I would class as the 4 Ps. So the first P stands for planning. So actually creating a plan. It's proven to reduce stress and actually increase focus. So just by taking the step of writing down a plan of action, it can yield instant results in that respect from a mindset point of view. Of course, the plan needs to be actioned, and we'll talk a little bit more about that shortly, but a proper plan is a starting point. The second P would stand for people. So surround yourself with positive people. Don't let other people's negative energy drain your precious energy. Part of your job as a leader and a business owner, of course, is to support your team who may be feeling negative. And how you communicate and position the situation to them is really, really important. If you're giving off positive, optimistic energy, it will resonate and feed through to them. And like a lot of things, delivery is crucial. And we're not saying go in and be ultra positive all the time, but just when you're around your team, be as positive as you realistically can be, wear that mask if you have to, and use other people to let out when you're feeling down. So try not to bring it into your team environment, so to speak. The next P I would say is places. So one thing that I do that really helps me is when I'm feeling anxious about things is visualizing that happy place in my mind, a reference point. And often business owners refer back to their why or their purpose. And that's something that we cover on our IAP program that we'll touch on at the end. And often doing this alongside something like meditation or yoga can really enhance the benefit of bringing you back down to that big place where you feel comfortable again. And the final P is practice. So practice, practice, practice. And what I recommend is short and often is generally better than just a load every once in a while. So build up habits by starting out so small that it's pretty much difficult or impossible to fail. And you see many people who, using the example of meditation or yoga, for example, will go away and set a goal such as like, I've never ever meditated before in my life, but from today onwards, I'm going to meditate for an hour every single day. And I mean, that might work for a day when you're really motivated, or even the first couple of days, but it's likely that because you're setting such an extreme goal from where you are now, you're going to miss a day or two, and then all of a sudden the habit will disappear. And I watched a really, really good video recently that's all about starting so small. It is practically impossible to fail. So in this example, if you want to start meditating, start with 1 minute a day, because it's so small. It practically means that whatever else is happening in your life that day, you'll be able to find a minute. So you will complete it, and then you'll start building momentum really, really quickly. You'll say, well, a minute's easy. I can do 2, I can do 5. And all of a sudden you'll get into that nice routine of building up that habit. And that is a massive, massive step.
So, okay, I want to touch on the meditation side of things though, because it's something I practice and preach quite a lot. But meditation doesn't necessarily, whenever I speak to people about meditation, they're like, oh, it doesn't work for me lying there, you know, it's too spiritual for me. But meditation can be going for a run. Meditation can be going for a walk. Meditation can be exercise. It can be anything that takes you away from those thoughts of every day. It takes you to a place of where nothing else matters. So sometimes I'm not really in the mood to shut my eyes and listen to guided meditation or listen to certain frequencies of music. So I do a lot of running. I take myself out running, and I take myself to a place of, even if it's watching a movie, somewhere where nothing else matters apart from what I'm actually doing at that moment in time. And I think that when people say meditation, a lot of it, you know, like I said, people think it's very spiritual, but and you have to be, you know, in that spiritual zone, but you don't necessarily have to be there. And it really does help with the anxiety, and it allows you to really focus on making key decisions, you know, and it takes you away from that what's the word I'm looking for, that place of discomfort where, you know, that anxiety where you're thinking, oh my God, this is, you know, the stress of getting through this period. So I think meditation is massive, and it really helps with anxiety. It helps me with anxiety. All right, so look, I want to move on because I am conscious. I want to get through the questions. I'm in the right frame of mind now. So we've accepted that mindset is huge and it's massive right now. What next?
Okay, so I mean, the first starting point is obviously we've been through a lot of the changes in the rules. So if you haven't done already, assessing all your options around these new government incentives that we've mentioned. As things progress, bear in mind, we could see another reduction. The government have already put that feeler out to say in January, we're going to be having another look, which obviously sends a warning that might be cut back. But what you need to do is take this on board, build it into your cash flow forecast, because anyone that's listened to the previous webinars or has been around me over the last 6 to 9 months is probably sick to death of me saying the word cash flow forecast, but it really is the most valuable tool that you can have right now to support you in the business. So check and make sure that you're doing everything you can for the government incentives, point one. Then make sure you have your cash flow forecast up to date and is working with you.
And we've got templates for cash flow forecasts. So if it's something you want to, we created them in our COVID toolkit, which we launched during the first lockdown. So if anyone hasn't done their cash flow forecasts, which you should have done, it's never too late. Do send me an email. Mitch@nordens.co.uk. I'll send you the cash flow template, and you can give it a go at doing yourself. And if you need any support, we can help you. But look, Joe, a lot of people actually don't do cash flow forecasts because they feel like they're guessing. And I completely understand where they're coming from, but I don't agree whatsoever. So to answer those people, what would you say?
Well, I think it's one of them things, isn't it? We've had it with clients before. I know Darren's dealt with it in the past as well, and I think it's one of them that people can't immediately see the benefit, because effectively you're just predicting what could happen. We couldn't have predicted this pandemic, but the reality is, if you don't do a forecast, how can you possibly gauge what decisions you should be making? How can you, for example, using what Darren was touching on, how can you quantify if you even need funding? At what point do you need it, let alone what level? So having that cash flow forecast allows you to make the best possible informed decisions you can. And right now in this climate, that's priceless. You know, that's the minimum you need to be doing. It's so important. So I do understand why people have that perception like you. I don't agree with it. And I think you just have to do it, because we've done it with clients in the first lockdown and the start in the second lockdown, where as soon as you've done that cash flow forecast and you've done some different scenario analysis, and you've got plan A, you've got plan B, you've got plan C, all of a sudden you can see the energy flow back into them, where they've realized that, you know what, it's not actually as bad as I thought. I was hiding away from it. Now I've got it all down on paper and I can see route 1 or route 2 or route 3 out of this. I feel relaxed now. I'm re-energized. I can go again. And that's the problem. Not doing it just leads you to potentially bury your head in the sand.
Yeah, we had a lot of that, didn't we? We had a lot of, when we put our contact plan, so we put a contact plan in place for all our managers to contact their clients just to make sure they were okay and they were going to survive, and to let them know that we were here. And a lot of people thought the world was going to end, and thought that they were going to go out of business and they only had a month left and so on. And we were pushing people to do their cash flow forecast. We, your department especially works a lot with our clients to put together cash flow forecasts. And once we put them down together, once we put them down with the client, it wasn't that bad. I think it wasn't that bad at all. And that, some of them had 6 months, a year, and it makes such a big difference. So cash flow forecasts are key. I completely agree with you. And it's the first thing. Once you've got your mindset sorted, get your cash flow forecast down. Or the other way around, because your cash flow forecast can probably help with your mindset. Okay, so look, Joe, what things can we do to preserve cash? Assuming worst case that we go to Nordens corporate finance department, Darren, the super do corporate finance person, cannot raise any type of finance for you. What can you do to preserve cash?
Okay, so right here and now, what I'd say is the strongest area of support that you've got externally is from HMRC. Like we mentioned, they're still being lenient with all forms of taxes. They're encouraging communication and two-way dialogue as much as possible. But before you make any payments across to HMRC, speak to your advisors and make sure it's manageable, both for now, but also thinking into the future, that you're not just taking advantage of the leniency now and just creating that massive, huge hole that's going to hamper your future plans. So short-term planning is essential, but you need to couple it with a long-term outlook as well. So like everything else, balance is key, but you need to be aware and utilize whatever HMRC are going to give you at this time, in my opinion. But the starting point for a lot of this is getting your books and records up to date. You need to have up-to-date records. Darren will need to see up-to-date records to have any chance of raising finance. You need to clearly see where you are. So a lot of people in times of difficulty or panic will leave their accounts or their VAT returns to the deadline. And it may seem like a bit of a strategic move, because theoretically they don't have to be done until that date. But all you're doing is prolonging your uncertainty. So a huge first step in knowing where you stand is having that up-to-date information, so you're actually better placed to make the right decisions and access that external support should you need it. And we've touched on HMRC being a bit lenient in terms of you making payments, but as we've mentioned on previous webinars, there's a tax relief out there that can actually result in you getting cash back from them. Many businesses are actually still unaware it exists. It's called R&D, or Research and Development Tax Credits. It should be explored by every limited company business. Unfortunately, it's not eligible for sole traders at this point, but anyone who has a limited company that is doing anything that they feel would qualify as development, run it past us. We'll be able to vet it for you to see if it meets the criteria. It has to be worth a phone call, and we've had many clients who have had a lot of cash returns from it. So it's definitely something to consider if you haven't already. Like we said, get in touch. We'll be able to explain more. And I think, Mitch, you did a video on it as well not that long ago.
Yeah, we did. It's actually on our website. If you go to Nordens TV, part of our website, there is a video explaining everything to do with R&D, and you'll be able to probably gauge yourself whether you qualify or not. And if not, if there's still a question mark, then absolutely give us a call, because we've had businesses that didn't think they would qualify receive big sums of money, and it's paid back within 2 to 3 weeks as well. So it's paid back pretty quick. So look, we touched on mindset, we touched on cash flow, R&D. What advice have you got in, I know you're going to go through different areas. What advice have you got that business owners should all be doing right now if they haven't already?
So I've summarised some of the key things that we think that business owners should be doing at this point. And I think one of the big positives that actually came out over the last lockdown is, we've mentioned it before and we've chatted about it, and it was that a lot of business owners actually had a bit more time to think strategically and what we call working on their business. When you're heavily busy and ingrained within the day-to-day, it's not always given the time it deserves. So I think that was a big positive from our point of view, looking in to see that a lot of business owners actually was thinking more strategically about their business. So some of the things I think business owners should be doing, I think, like I touched on, cash flow forecast, knowing your break-even point. Remember, we have the templates. Like I said, I've had feedback from people who've watched the previous webinars, created their cash flow and break-even points using the tools, or received more bespoke help where we've worked on different scenarios. So you're not just putting it together and this is my one and only option. So everyone listening, everyone who has done their cash flow forecast and is now making that part of their regular tool in their business, well done. And from my point of view, to speak with those business owners, see the relief on their faces once they've realised their fears aren't as bad as they initially thought, and start seeing that light at the end of this COVID tunnel, was really priceless to me. So that, again, I just want to reiterate, it's the first step to taking and feeling back in control of the situation. Something else I'd recommend is getting really clear on your business's purpose and the vision, because if you have a clear why or purpose that's bigger than even yourself, and a vision that you're really determined to work towards, that can be the difference between persevering or just giving up or burying your head in the sand. Following on from that nicely is setting what we call SMART goals. So it's so important that the goals you're setting from here on in are SMART and meet the SMART criteria. And that stands for, firstly, specific. So you need to explain what you're going to do. Measurable. Make sure that the goal can actually be measured. So at the end of the goal period, we can say, yes, we've achieved it. Make sure they're actually achievable. Make sure that they're relevant, and also make sure that they're timely. So what I suggest is, have a little think about the last goal that you set and you didn't achieve it. The chances are it probably fell down because it didn't meet one or more of these criteria. But flash back to the last goal you actually did achieve, that you set yourself and achieved. And on the flip side, it's likely that that goal you set would have met every single one of those criteria. So make sure when you're setting your goals, you're having a quick check, are they smart? And if not, what can we do to make them smart? Another thing I think business owners should be considering at this point, sort of feeding on from the extra time you may have, stress test your business model. Have a real deep drill into your offering. Does it work now? And probably more importantly, will it work in the future post-COVID, in the new world that we're going to enter? So as we've mentioned before, sort of financial modeling and creating different scenarios are great to give you that better understanding and gauge on different pathways to achieve your goals. Most businesses would have collected lots of data for one reason or another. It's a great time to analyze this and see how it can be put to good use. But bear in mind though, a lot of the data collected is pre-COVID. It's likely to be a less meaningful representation for the new world we're living in, but it will still be useful in some way, shape or form. So if you went to the effort of having lots of data, do something with it, make the most of it. Another thing that we've seen quite a lot of with a lot of our clients is pivot strategies and looking for opportunities. So I believe a lot of that starts by setting time aside to actually speak and interact with your customers, find out what they really want, find out what they really value at this time. And it will really help you frame your offering as you come out of COVID, as we all move forward into this new world. Are there other services your customers could benefit from that you can deliver but just haven't made them aware yet? Are there opportunities to slightly tweak your business model and offer it in a brand new space, or offer a brand new concept? And are there opportunities to collaborate with other businesses in slightly related industries, which will create synergies? And at the same time, it will diversify your offering, because you see that the businesses that are heavily reliant on certain aspects are often the first to fall. So if you can diversify your offering, it will be really, really beneficial, not just now, but for your future. Other things such as analysing costs. This doesn't necessarily mean jump in and just cut everything and cancel every direct debit, but make sure you're getting the most value from your expenditure. Hold your suppliers accountable for delivering the right level of value to you.
Sorry, Joe, another thing to add on suppliers would be to potentially negotiate your payment terms as well.
Yeah. I mean, staying close to your team as well. Definitely look at aligning together and fighting the challenge of this pandemic that we're in together. And Sharon from our HR department's given me a few really useful things to think about when considering like the well-being of everyone in your team. So simple things like ensuring that open lines of formal and informal communication exist. You know, people know who they can talk to, where they can talk to, and they feel comfortable to do it. Make sure that your employees are working reasonable hours to encourage that good work-life balance. It is difficult, especially when people are working from home, to gauge this, but I think that's where the regular communication comes into play. Encourage your team to go out for a daily walk. I know myself, if I don't go out for that daily walk, I'll be struggling because it's not the best environment being in the house or being in the office all day. Go out for the walk, get a bit of fresh air. You know, it makes a difference. Set clear and achievable objectives and work demands. As everyone's becoming busier and things are more difficult with the whole different mechanics of working, make sure what you're asking people to do is as clear as possible now more than ever. Make sure if you are furloughing people, include them in the communication as a firm or as a team, because it's really important they don't feel left out. Carry out a survey. We did this pretty early on in our business to identify the employees that we have concerns about the well-being. Anyone who has any concerns, do something to address that as soon as possible. Obviously, it goes without saying, keep everything confidential. Provide training wherever possible on how to recognise stress, both in yourself and in other people. Provide your employees with access to help wherever you possibly can. Set up an employee assistance program. And if you can, and the business is big enough, set champions for mental well-being. So they've got that focal point, that person to come to. And ensure the business knows where to access the occupational health assessment. So Sharon's given me a few really good tips there, and I wanted to share them with everyone because I think they're really relevant. But also, when we're on the subject of your team, plan ahead now and consider the characters and the people that you need for your post-COVID team of the future. And where possible, start filling these gaps in your structure now. It is what I feel an employer's market at the moment, so there are opportunities to capitalise with all other things being well, of course. As you mentioned, Mitch, suppliers' payment terms, really, really important we get them in place. Speak to your suppliers, just like you're speaking to your customers. Speak to your suppliers. Chances are they're in the same boat, but they're going to be more open to working with you if you're upfront and honest with them. And as sort of Darren touched on earlier, consider investments with a lot of businesses that are struggling. If you are actually in that fortunate position where you have some surplus cash, don't just sit on it. Consider how you can actually invest it to make it work best for you, because we will get out of this. This will end and we will get back to some degree of normal. And it's important that you focus on, have an element of focus on the long term to push your business forward at super fast pace. And we are seeing that. We are seeing businesses we're working with that are really thriving in this. And so things to look at when you're talking about investments, marketing. I mean, a lot of people stop their marketing straight away as soon as anything goes bad to save costs, because it's often one of the biggest costs. But what it does is, by increasing your marketing push, it gives you a real big opportunity to capitalize and make the most of your marketing efforts. Recruiting, as I've just mentioned, it is an employer's market, so it'd be a really good time to start building your team of the future. Another thing to really look at is automation. What processes in your business hold you back? What processes in your business take up a ridiculous amount of time? You can now automate these so much easier than you used to be able to. And it will not only improve your efficiency, but it will improve your bottom line as well. And finally, equipment and development, touching back on the earlier point about research and development reliefs from HMRC. We've seen many clients make the most of this as part of their ongoing investment strategy. And finally, one thing I've sort of touched on, but I think probably arguably the most important thing is, do not bury your head in the sand. We do appreciate it's tough out there. It's part of the reason we're doing this webinar. It's part of the reason we're looking to support everyone as much as possible. We've made it our mission to help as many of our clients' businesses not just survive coronavirus, but completely beat it and come out thriving. The only way we'll be able to work together on that is if you communicate with us and speak up. So do not bury your head in the sand under any circumstances. Please speak up. Communication is the first stepping stone of everything. You have to speak up.
You mentioned the automation just now, and I think that's quite a good point to bring out, because I think there's a lot of businesses that are going through using this opportunity to make sure their systems and processes are actually efficient enough. And then once they're doing that, they're looking at automating it. But we've had some companies that have invested in automated their systems, and it's actually quite funny because they get most of the money back through R&D tax credits anyway. So it's actually not a bad thing to consider right now. Again, we've done it a lot. We've done it with clients recently. So if anyone watching is interested in looking at their systems to see if there's potential automation, then that's another thing that we can discuss. But Joe, you mentioned communication, and so before we get onto the questions, you mentioned communication, and one of the things we've launched to keep communication flowing, and it's been absolutely brilliant, you know, I do it myself, it's phenomenal, is the IAP, the Interactive Acceleration Program, which you founded. And you know, you should be extremely proud. Can you tell us a bit more about that, and I guess how it can help the communication?
Well, I think you're being very generous there. I think it was a group of people put our heads together and created this. But yeah, I am very proud of it. The reason that it's come about is obviously what we've worked with hundreds, thousands of business owners over the years, and what we've learned is that most of them are really, really brilliant, technically excellent at what they do, providing and delivering the product or service. But when it comes down to running the business, often they can just end up with just so many thoughts and ideas that they struggle for that direction and just a way of prioritizing things. And what that can do is it can actually lead to the business owners or the people burying their heads in the sand and actually not acting on any of the ideas. And because of the lack of progress or the lack of results, they'll start feeling really, really down and low. And then therefore, off the back of that, their business will become less and less effective. So compounded by that, there's also the issues what I class as being at the top of the tree problem. So it's a lonely place with every single person looking at you for all the answers. It's a very difficult place to be in at times. And secondly, a lot of the time, small business owners don't have that crucial support network, and they often make decisions based on their gut or the way they've always done it, which means they may miss out on opportunities. Because when you speak to people with different outlooks, different perspectives, and they're unemotionally involved, it can often make you realise that, you know what, that because I'm so ingrained in it, I kind of miss that. And finally, due to the lack of accountability, they don't set goals very well, or they just don't set goals at all because they've got no one to hold them accountable. So I'll do it when I'm ready is the sort of attitude. And the benefit of a support network, honestly, it really can't be underestimated. And generally, what I found this more than ever, that just a different perspective. I mean, I do it with the strategic department at Nordens. We have different perspectives. We come in and we talk to people who are external, and they'll give us different perspectives on things. And one of the things that we found, though, is that our sort of high-level strategic consultancy service, a lot of clients and business owners want it, but it's often outside their price bracket. So we've created the IAP. It's an interactive way of offering consultancy in a group format where we have 2 weekly online sessions on a program like this, Zoom or Teams. And in each session, you will share challenges and success with the other business owners from different backgrounds who will offer those different perspectives. You'll focus on very, very clear and specific goals for the next 2 weeks. So there's not a big gap. You've got a very short period of time to achieve things, and it will build momentum. You return to every session with that sense of achievement, and it will also boost that feeling of accountability. You're now accountable to the group. You come back, you share whether you've achieved your goal or not to the group, and you receive the expert insight from ourselves and the team of special guests that we have on each of the sessions. And Mitch, I believe you're going to be sharing the link to the IAP, the Interactive Accelerator Program's website, with everyone on the call today. So anyone that wants to watch that, more than welcome to. I'd recommend it because there's lots of videos up on the website that are completely free for you to watch and have some really good tips for business owners. But if anyone would like to hear more about the program, just get in touch. We'd be happy to explain how what we feel for the price of a gym membership can actually take your business to the next level. So just to close with me, I mean, it is a bit of a minefield out there at the moment, and it's really too easy in these uncertain times to just get really bogged down with the endless possibilities of things you could be doing. So start small, target that one thing you can do right now that will get you the best result. Do that one thing first, get those endorphins flowing, and then move on to the next thing, confident and motivated. It's how momentum's built. So it's brought many challenges, no doubt about that. But like Darren said earlier, there's still plenty of opportunities out there. And it's important that your business is set up to make the most of them. So, I mean, that's it from me, Mitch. Hopefully everyone who's listened has found that useful in some way. But I think, yeah, like I said, please speak up if you're having any concerns.
Thanks, Joe. I have shared the link to it. Like Joe said, there's lots of free videos on there, which are absolutely fantastic. So check those out. And it's worth saying that some of the stories, the success stories from the IAP are phenomenal. You know, people achieving amazing, huge finance from speaking to someone on there. Just you know, the networking as well. So it's, you know, the amount of business that's created from the network of people on there has just been phenomenal. But look, let's go to some of the questions, because I do know that we are running slightly over. So Darren, one for you. Revolut Bank. Someone's with Revolut Bank and they're not on the list of banks that can connect with the CBILS. Can you? What are their options?
Right, so Revolut, yeah, they don't offer the CBILS or the bounce back loan. So for anyone with Revolut, their option is going to have to be to go with an alternative lender, so not a bank. So it's going to be, if you've heard of them, funding houses like Funding Circle, iWalker, Merchant Money, Ultimate Finance. There's a few out there, but yeah, just not a bank basically. But there are plenty of lenders that are doing that. So if you head to the British Business Bank website, you will be able to see all of the accredited lenders that are offering the CBILS. I'll put it in the chat box, a link to the page, so everyone can click on that if it's and see what lenders are out there.
And can that person contact you for any support to help raise that finance?
Oh yeah, definitely, yeah.
So another question with regards to the CBILS. It's a 6-employee company with about 700k turnover and 200k profit. Can they claim for the CBILS for a capital investment in property or in another option? My understanding is no option as the company is too young.
Sorry, how old is the company? It has to have been trading as of before the 1st of March.
Okay, so any company that's traded before the 1st of March is able to apply for.
No, yeah, exactly. Yeah. If you commence trading and started trading after the 1st of March, then yeah, it's unlikely and don't really fit into the criteria. There are still options though. So it depends on when it was. Sort of, it's been 1 year old is one thing. If it was incorporated, then that's, you know, it's about when it actually commenced trading.
Okay, cool. Thanks, Darren.
But if it isn't eligible for the CBILS, there are other options. So it's not that it's just CBILS or nothing.
Cool. Thank you. Joe, does the extension of the furlough scheme cover all employees or just those who have worked but can't because the business has been forced to close for the duration of lockdown?
I believe it's all employees. I'm pretty sure that's the case. It applies to everyone. Obviously, if there's no need for that person to be working, it's generally going to impact the businesses that are struggling because of coronavirus. If everyone's still able to work, then it's not likely to affect you. But so, although it's not specifically for businesses that have to close, it will be businesses that have been severely impacted with it that will be using the furlough more than others. There's no specific rule on it as far as I'm aware, though. I think if you need to downsize and make an employee part-time for a period of time, you can do that and claim furlough for the other half, so to speak.
Thank you. And if staff are still on furlough since March 2020, due to the extension, does staff need a letter or another letter from their employer again? I think that's I think with regards to things like that, it's extremely important, as we elaborated on previously, to seek HR advice. I think you just need your HR to be watertight. So for the person who asked that question, just drop me an email. I'll introduce you to Sharon, who Joe's mentioned, in our HR team, and she will be able to give any advice towards that. But I wouldn't want to answer that on here. I think that it needs specific HR support. Yeah. When would you say is the best time to contact HMRC to discuss a time to pay arrangement for VAT and PAYE?
Well, I think if you've got that cash flow forecast set up and working, what I'd recommend is have a chat with us. We'll have a little look and we'll plot ahead, because I think HMRC are encouraging everyone to contact them as soon as possible. But if things are likely to change and it's more of a medium term planning, we may not want to call them straight away. But my general consensus is that once we know that we're going to be needing to ask for a deferral or some form of time to pay, let's be upfront with them as soon as we possibly can, because there's more chance of them agreeing and working with us. But I think before we jump in and contact them, let's have a look at that cash flow forecast first. I think that will be the best way forward.
Good, thank you. And Darren, any help for company directors?
Not in the form of sort of raising finance. I think that might be something to do with furlough or government grants. But no, there isn't anything specific for directors. So if they're an employee of the business and they're on the books, then yeah, they can claim furlough. But yeah, other than that.
So I would suggest that, again, if you are a company director and in need of finance, speak to Darren, because there may be products or opportunities to raise finance, to raise some sort of finance for you, depending on how much, obviously, that you require. Okay, I'm going to ask. Let me see. I'm just going to go to the next. Okay, bounce back loans. Question about the bounce back loans, Darren. My question is about bounce back loans. If someone has a turnover of 300K and got a 50K bounce back loan, would they be able to get another 25K as 25% of the remaining 100K under the top-up basis, or they can't, as the maximum someone can get is 50K, which they have already got?
Yeah, that's right. So it's going to be the maximum. It's the total amount that you can get under the bounce back loan is the lower of 50,000 or 25% of your turnover. So it means that you can top up to the 50,000 if your turnover allows you to do it. So the extra 25,000 you're referring to, yeah, it's just not going to happen. Anything over 50, then you're going to want to go down the CBILS route. Now, if you do need more money, what you can do is you can go and get a CBILS and refinance the bounce back loan. So with the CBILS money, you pay back the bounce back loan and then you've got more. So that is an option as well.
Okay. And to speak to you again, should they
speak to me about it. If you've got any finance questions, queries, or need help, assistance, whatever it might be, yeah, speak to me, give us a call. I'll be happy to help.
Okay, cool. So, Joe, I'm a director of a limited company that delivers seminars and group work internationally. We haven't obviously been able to travel, and Zoom doesn't work so well with time zone differences. So our income's dried up. Do we as directors qualify for the furlough scheme?
Yeah, directors do qualify for the furlough scheme, but obviously it's dependent on you not working. So in this situation, if the work has dried up and you are literally left just doing very, very basic, the sort of the simple admin tasks that all company directors are supposed to do, then yeah, you would qualify for furlough. Because it's a bit more flexible now, then that might be a good strategy to utilize for the upcoming weeks, because you can always take yourself off it easier than you did were able to in the past. But yeah, directors do qualify, but the key thing is that you shouldn't be working while you qualify if you're furloughing yourself. And I think directors are at the most risk of that, because obviously if the business is seen to be trading, then it will be quite easy to say, well, the business is unlikely to be trading without the directors. So you just have to be careful. But yes, in theory, directors can qualify and claim the furlough.
Thanks, Joe. And I'm going to throw a question out that we've been asked to both of you, and it's a tough one. What are the best ways for struggling restaurants, pubs, clubs, cafes to financially survive this period in order to grow in the future? So hospitality, what would you advise hospitality right now?
On a finance point of view, I would recommend getting something in place called it's called Merchant Cash Advance. And it's a product where the finance, you get a cash advance, and it's linked to your card terminal. And it means that for every pound that you take in revenue through the card machine, X amount or X percent goes back to the lender, which means that the busier you are, the more you pay back. It's always the same percent, but the busier you are, the more you pay back, and the less busy you are, the less you pay back. And it means it's a lot more manageable. So you haven't got these fixed large payments going out, whether you are busy or not busy. I think it's worth having in place so that when things do kick off, you know, that you manage to get the advance in now to help you through this time. And then when things do kick off, it's you're able to kind of repay it back in a manageable format. But yeah, that's what I would suggest for hospitality. It works well in retail.
I think obviously, aside from the things that Darren's mentioned from a funding point of view, I think it's you've seen it already with businesses in the hospitality industry that are pivoting their offering, doing deliveries. If they're a club, they're doing online events and things like that. I mean, it's not easy. I'm not going to pull any punches. It's not easy out there for those people in those industries. I totally accept that, but I think there are opportunities, and I think a lot of it stems from speaking to your customer base, find out what they actually value. Like we were saying, look at the ways that you can pivot and do deliveries if you can. I know they relaxed the rules for pubs with outside services and things like that. So I think if you're able to look at that sort of thing, look at ways you can pivot your offering. What can you do? Because the thing is, it's not just about now in that industry. Who's to say another lockdown won't follow this one? You know, so it's about setting yourself up for the longer term. And does that business model survive another lockdown? Even if we manage to get through this one, does that business model survive another one? Possibly not. And I think that's the thing. It's about pivoting and diversifying wherever you can. And your customers are the first point there. They're the first people to speak to because they'll help you shape that.
Yeah, I also, just following on from that, is I've actually got a good friend who owns a chain of pubs, and he actually rented his kitchens out to a takeaway company, and the takeaway company are thriving so much. He actually agreed a percentage of their sales, so he's actually earning more from the takeaway and delivery business than he would do if his pub's open during the week. So, you know, there are ways to pivot. And I was actually having this conversation this morning with Mark Norden, in fact, was saying that, you know, it's about just to stand up and actually do something about it and not being in denial that, you know, we're here, it's not going away at the moment. And, you know, people just need to stand up to this virus and, you know, start making changes. And it's do or die, and no one wants to die. So I think people just have to do and look for ways to pivot. And if you don't know how to pivot, there is a way, you just don't know it yet. So, you know, talk to us. We'll help you come up with the answer should that be an issue. Darren, following on from the merchant finance option, is it available for anything, for say a restaurant set up less than 1 year?
Yeah, it's not. Yeah, you can definitely get it set up, even new businesses.
Okay, excellent.
Yeah.
Okay, good. So yeah,
there is another type. There is a similar type thing. It's pretty much the same thing, but for online sales as well. So right, it goes through the online system as opposed to the card terminal, but it works exactly the same way.
It just goes to show there's a product there for pretty much most things, right? No, it's good. So get in touch should you need. We've covered it, but a question is, what do you see as great opportunities in this time of adversity?
Well, I think. I mean, there's lots of opportunities. I mean, it's quite a wide-ranging question, isn't it? To be fair, there's lots of opportunities, and I think you have to look at the industries that you're in and see how your customers and the business will look and what people are going to value as we come out and exit this pandemic. I mean, looking what we've done in terms of our online consultancy offering. If the coronavirus hadn't have hit, that might have not been on the forefront of our agenda, you know. So I think it's triggered a lot of opportunity spotting, and that's what I was sort of referring to earlier when I mentioned that business owners spending that time to analyze what their business is actually there for and what opportunities that are there for the future, how the business will look as we come out of COVID. I think opportunities are there. Things online, of course, that's obviously going to be worthwhile at this point in time when people are not able to do as many things as they were. But there's lots of different things. I mean, we've seen lots and lots of different pivot offerings, but I think it needs be specific to your industry and your business, really. And I think you start with that and something will come out of it. But one other thing I think is worth looking at is looking at related businesses and related industries, and can you combine what you do with something that's going on in another industry to create what anyone who's familiar with the book Blue Ocean Strategy, Mark Norden lent it to me a few years ago, and I thought it was excellent, about how you can combine two industries or two segments of businesses or industries and create something completely brand new, you know? And I think that's the whole way a lot of the technology companies have developed their offering over the years, you know? And I mean, one of the things that really drilled home to me was when I watched the film The Founder about McDonald's. It was really interesting when the guy turned around. He was his accountant, actually. He turned around. He said, "McDonald's isn't a fast food company; it's a property company." And I was like, "Wow!" I didn't really think of it that way, but obviously it makes perfect sense. You know, they made a lot of the money from purchasing the land and renting that on to the franchisees. So I think it's just understanding your business and your business model to the right degree, and then you can see if there are things that you can bolt onto that to offer maybe a completely new offering in related industries. But I think it's something that you need some proper strategic thought to explore.
Yeah, thanks, Josh. Good answer. And the last question, because we've overrun, and I am aware that people need to go. So anyone who we haven't, I apologise if we haven't been able to answer the questions, but just drop me an email and I'll get them answered for you, or put you in touch with whoever can answer it. But would there be a way for Norden's clients to be on a network list if they wanted to encourage partnership working where appropriate? Well, it's actually funny you should say that, because it's something we've been thinking about for a while. We're just trying to work out a way in how to do it. But Joe touched on the accelerator program, the interactive accelerator program, which I've put the link in the chat, iaplive.com. Have a look at it, because the actual program links directors with one another. And like I mentioned before, there's been a lot of businesses and business generated and partnerships generated from people coming together on the program, and it's been really, really nice to see. And there's been some great success stories. So we're looking for ways to do that. Because we've got such a great client base, all different variety of services and products. So in answer to your question, yes, there is something, which the IAP, we are looking to expand it for a lot, for the whole client base. We just haven't worked out how to do so yet. But good question, and I'm pleased there is some demand for it. But do check out the IAP, because if that's something you're interested in, I think something that could really benefit you anyway. Right, I think we will leave it there. Firstly, I just want to thank everyone who came onto the webinar. I hope you found it useful. We'll try and do some more in the next few weeks, and updates or not, to try and help people through it. If anyone wants any of the Cashflow templates or any of the break-even tools that we've got, send me an email, mitch@nordens.co.uk. I will arrange for those, for the link to be sent to you where you can download them. If you need any support, whether you're a client or whether you're not a client, then also get in touch with us. And yeah, listen, have a great end to the week, everyone. And thanks for tuning in. And thank you, Joe, and thank you, Darren, for joining me today.
Yes.
No problem.
Take care.
See you later. Take care. Bye.